Texas Instruments reported fiscal 2023 first quarter earnings results that disappointed the market. The figures were not as good as the market wanted to see. Given the semiconductor industry is experiencing headwinds, still, Texas Instruments did not deliver what investors were looking for. In this video, I'm going to review those earnings results and then answer the question, is the dip in TI stock an opportunity, or should you stay away from Texas Instruments stock? Also, if you're a dividend stock investor, Texas Instrument pays a healthy dividend. So this will be interesting for those of you looking for dividends, those of you who are interested in passive income. This is a good company to look at. So let's begin. Overall revenue decreased for Texas Instrument by 11% to $4.38 billion. Earnings per share decreased by 21% to $1.85. That was down from $2.35 in the same quarter the year before. Of course, if you're not aware, the semiconductor industry is experiencing major headwinds. There is now an inventory glut. There is too many of these semiconductors in the markets today, and so end users or the partners for TI are pausing or delaying purchases or orders of new equipment or new semiconductors because they've got so much on hand already. And there is growth in the industry overall. However, the existing inventory is sufficient to fulfill that growth. So it's just a matter of an overreaction to shortages during the earlier parts of the pandemic. Semiconductor companies overreacted and built up too much supply, and their partners too overreacted and ordered an abundance of supply for fear of not having enough when customers came to their stores. So now there's just built up inventory in the system overall that needs to be worked through. Now some estimates suggest these headwinds will last all the way to the fourth quarter of this year. Some suggest it'll go all the way to the second quarter of next year. So there's a range of estimates suggesting when these inventory gluts will work their way through the system. And for now, it remains to be seen. Uh, Interestingly, despite the fall in revenue, Texas Instruments' cost of goods sold increased to 1.5 billion, up from 1.46 billion. Cash flow from operations fell dramatically, almost halved, but to 1.16 billion, down from 2.14 billion. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Unfortunately, management is forecasting more pain ahead. Second quarter outlook of revenue in the range of 4.17 billion to 4.53 billion, and earnings per share between $1.62 and $1.88. So it looks like a sequential decline in earnings per share and potentially a sequential decline or flat revenue target or revenue estimations. Um, so yeah, like I mentioned earlier, near term, several headwinds for Texas Instruments to get through. Um, Trying to work through that inventory glut in a macroeconomic environment with rising interest rates and changing consumer demand, right? These semiconductors are found in electronics, and consumers have shifted their purchasing behavior to spending more of their wallet on away from home things like going to restaurants and bars and things like that. So that's made it even harder to get through this excess inventory of electronics like TVs, iPads, tablets, laptops, personal computers, smartphones. It's having a harder time getting through this inventory because consumer behavior is changing so rapidly. So whether or not that makes this an opportunity, looking at Texas Instruments valuation, it's trading at a price to earnings of 17.77. That's near the lowest it has traded for going back all the way to 2014. So if you're a dividend stock investor and you want to start adding Texas Instrument to your portfolio, I don't necessarily think that would be a bad idea. You're getting a good price for the stock, and it's already arguably accounting for the headwinds, and you can start adding shares every month over this year, and the headwinds are likely to abate by the end of this year or maybe in the first quarter of next year. All right, so that's all I've got for this video. I truly appreciate your viewership, and if you want more videos like this one, I'm going to produce a lot more over the next few weeks, so I would recommend that you subscribe and feel free to enjoy all of those videos. All right, thank you so much for watching. I'll see you again soon.